All right. It's great to be here. Okay, we're going to talk a little bit about market data and why financial market data is the most underrated market in the world. And we will start with a little audience participation. So if you had to guess, what do you think the revenue for financial market data was in 2024? Give me a couple guesses here.
5 billion, 2 billion.
2 billion. 8 billion. You guys are crazy. All right. 2, 5, 8. Okay, well, I'm going to give you a hint. If you owned market data or you invested in the means of distributing market data in the last 25 years, you would have outperformed gold by 2 times. You would have outperformed the S&P 500 by 7 times. And you would have outperformed oil by 18 times. So you might be wondering, well, who's making all that money? So there's 2 key market players in market data. There's the producers. So the producers are like NASDAQ or the New York Stock Exchange. These are exchanges that generate data from the matching activity and they sell it. And then there's distributors. And these are like Refinitiv or Bloomberg. They aggregate it together, they package it, and they sell it, distribute it. Now let me tell you a little secret. Pyth does both. Pyth produces and distributes financial market data. Nobody else does it this way. Everyone else has always wanted to. We created an entirely new business model to be able to do this. Yes, let that thing sink in. Okay, so since we started in 2021, Pyth has been the pioneer in redefining how infrastructure of financial market data works. We built the network with one singular objective: become the source of truth for financial data. Now, how do we do that? By bringing the price of everything everywhere. And we've done that with 60% of the derivatives market and the crypto market. If you were to trade on any app on DeFi, there's 60% of them that are already using Pyth. We've secured over $1.5 trillion in transaction volume. This is all through cryptographic, distributed, proof-based data on chain. We're trusted by over 600 applications across 100 different blockchains. It's fair to say DeFi runs on Pyth. It's happened very gradually, brick by brick. We've had app integrations every single month, about 15, and blockchains continue to grow. We're literally bringing the price of everything everywhere. As you look at all of the distribution from the data sources that are coming here, we've got equities, FX, crypto, there's crypto indices, there's redemption rates, tons of data. So in institutional adoption is accelerating. We're marrying these things together with fintech firms like Revolut, Jane Street, big trading firms like Virtu, banks like Nomura, and of course centralized exchanges. Oh, and then there's these guys. What's their name? Oh yeah, the Department of Commerce. The U.S. Department of Commerce is putting its GDP data on the blockchain over Pyth. Seriously. We've been working directly with them for the last couple of months to be able to generate that data so that people can use that on over 100 different blockchains in a cryptographically secured and delivered way, so that is in a composable way to be put into smart contracts. We then added a week later unemployment data, non-farm payroll data, and other stuff coming out of the government. So now we've got a playbook, right? So now we know what it is we need to do. We need to continue to bring data through this network, this distribution network. Anyone that has high quality data, they want to distribute it to the world to make it available on smart contracts, well, this is where they're going to do it from. We're creating the largest on-chain distribution network that's ever existed, cryptographically secured, right? So proofs are deliverable on all these different blockchains, fully compatible, interoperable, trust minimized, no single points of failure, transparent and verifiable so that you know that there's no single points of failure. And this was just phase 1. We just did literally all of this. I've been talking about this for the last 4 years, but this is all just phase 1. Build the infrastructure so that it can work on blockchains. Now, that made Pyth a top data distributor for the entire industry. And this is going to continue to grow. We're not stopping anytime soon here with the distribution of data on blockchains. We're going to continue to add more data sources and grow. But now we're actually entering into phase 2. So phase 2 is our institutional monetization. That's what we're going to talk about today. We're about to change finance forever.
The institutions are calling, and Pyth is the only one with the answer. You either die a hero or live long enough to see yourself become B2B SaaS.
So here's the truth that people don't know about market data. Okay, so no one has a complete picture of how this looks. So exchanges and distributors, they actually don't create the data, right? Like it happens upstream from this and with other participants. If no one's on an exchange, then, well, you don't have any data. So they sell packages and slice it together that are specific to a asset class and geography. And then the institutions, they have to go and buy multiple data sets through these distributors, and they stitch together this incomplete data. So to create a new model, you have to ask this question: why didn't anyone just go straight to the source upstream? And we didn't just ask that question. That's what we've done. We've done the impossible. We got the biggest trading firms in the world to collaborate for the very first time. So there's over 125 of them. And now let's go through some of the anatomy of what the financial market data system looks like, or used to look like. So you have where you start off, places where people trade. And so these are traders. So all the big trading firms are here. It includes also banks. Obviously, those are big trading participants. Oh my God, this is a ball of spaghetti. All right, so then you get these exchanges, right? So each asset class here is an asset class, US equities. You've got CBOE, IX, MEMX, NASDAQ, and NYSE. So anybody that's trading in equities, they'll trade in one of these, and there's actually a handful of others as well. If they go to US futures, there's a whole different set. And then none of these are going to be the same as you're going to have for, say, the UK or for Germany or for Spain. They're all different ones. And so each one of these is a little bit of an island. And so you get this massive fragmentation, and then it's all sort of bundled here. And then, well, okay, then you've got your distributors. And this kind of looks like cable TV in the late 90s, right? You'd have your distributor, you get a little bundle, and you want to buy some premium channels. You say, oh, give me this one, this one. So in fact, each time you're buying a new one, you have to then set up a new billing relationship with this. It is really a mess. Oh, and then let's look at the revenue distributions. So of those guesses we had, the $2, $3, and $5 billion, well, this is how much revenue is getting sent to the traders. And well, these guys are upstream. And then there's 46% goes to the exchanges, and then 54% to distributors. So we looked at this and we said, okay, there's a very simple thing you can do here. You can go get these guys to do something and pay them. And that's when we came along and changed everything. This is the Pyth model. It's way more elegant. So we have got participation from all of the exchanges, all of these traders directly to a singular price layer. We pay people for providing their data in a singular answer. So you don't have to then go stitch it together. It's already been consolidated for you. And we make that singular layer available to institutions. Oh, and this is what 2024 revenue distributions look like from the network to the different groups, 70% to traders and 30% to exchanges. Sadly, there's nothing for the distributors there because we don't need them. So we built the first and only straight from the source, farm to table, global price layer. But no, the job is not finished. Okay, so remember I asked that question at the start? If you are the girl, how much money do you think as a company? But in 2025? So we had 2, 5, 8 billion. It was $50 billion. You guys are way off. $50 billion a year that people are spending on financial market data in subscriptions. And it's actually increased over 15-fold. Remember, we compared it to some other asset classes over the last 25 years. This is the growth. So if you compare this and revenue share from market data from different places, the exchanges and distributors, percentage of their revenue that comes from market data, from exchanges, it's gone up to now over 30% on an aggregate. And this is where you can compare it to the other asset classes. Now, all right, I've already told you a gazillion reasons why we're going to capture a whole bunch of this market. It's created by institutions, it's for institutions. They're the ones that are effectively eating their own dog food. But let's just forget about all that for a moment. Let's just say Pyth just gets 1% of the market. That means that it would generate $500 million in ARR. That's pretty big for a crypto company or a crypto protocol. But let's assume not a scarcity mindset. Let's assume there's an abundance mindset, and we think that that market is going to continue to grow like it has grown, even at 5 or 6%. That puts us at 80 to 90 billion dollars by 2035. But we don't think that's going to be the case. If you take this into consideration, that RWAs have grown massively in 3 years, that NASDAQ and Robinhood are tokenizing stocks and putting in the mainstream, that we think we can increase this from 20 to 40% uplift, just like we've seen in these other advances. And that market again gets into the 100 to 125 billion dollar range. If we can get just 1% of that, remember, well, now that's $1 billion in ARR. Okay, DeFi TVL surged by 137% last year. Market's growing at 30-50% compound annual growth rate. Large language models, which are huge data consumers, are exploding. $7 billion in revenue in 2025, 36 by 2030, 123 by 2034. Well, where do you think they're going to get their data from? Do you think they're going to buy it from all this fragmented distribution model? All right. So if it's not clear to you yet, we're not just here to compete for the $50 billion. We're going to grow the And as the world starts to trade tokenized assets, they're going to do it on our rails. Now, how are we going to make it happen? And this is what we're introducing. Pyth Pro. Little cheers. Pyth Pro, thank you. Guys, come on, save it. Jeez. Okay, this is the ultimate subscription for financial market institutions built by the institutions themselves. It's the first time ever the institutions can access every asset class and geography in a single source of truth. It's got global coverage. It's straight from the top traders. It works for displays, analytics, reporting, all the things that people use market data for. And you can buy it by a credit card. You can buy it by stablecoin, or you can buy it in Pyth tokens. It's like the Spotify of market data. It's one kick-ass subscription that just keeps getting better. Every month we add 200 to 300 new instruments. So your subscription actually gets valuable over time. You remember a time when Spotify didn't have all the world's music and they kept adding more and more? It's like when they added the Beatles collection and they didn't charge you anymore for it. This is what we've built. Of our 125 institutions continue to grow straight from the source that we already talked about. It's got confidence interval bids and offers, 1 millisecond frequency time, incredibly accurate comparisons to all the major benchmarks, even in the earliest days. And this gets better as we add new institutions every single time. Less than 1.4 bips against the 99th percentile of all asset classes that are currently on Pyth Pro. Less than 1 basis point mid-to-mid comparisons in the E-mini futures contracts. 100 milliseconds end-to-end latency for colocation and distribution, showing that it is possible to create a very comprehensive, accurate view of the market without having to go and buy the data from exchanges. This is our coverage so far. And you can see it's pretty good. But we are going to leapfrog everybody. By next year, we're going to have over 10,000 symbols, becoming the largest data source for institutional data. This is a huge undertaking, and we're not going to stop there. We're going to keep growing. The year after, I hope that we can get to even more of a rate of growth, and hopefully 10x that. So how does it compare with legacy solutions? You can imagine it's more affordable, it's more streamlined, more accurate, more complete. This is where they are, low coverage, high cost, and this is where we've come in and totally changed the game. Pyth Pro is available at 3 different tiers. There's Pyth Crypto, which is a non-real-time data feed, so it's throttled updates. It costs you nothing. Just with crypto data, there's Pyth Crypto Plus, which is a real-time crypto feed, as low as 1 millisecond. And then there's Pyth Pro. And so Pyth Pro is our flagship product, covers all asset classes, continues to get better every time, and has everything in there. And this is how it scales when you compare it to other types of data sources that are specific to a singular industry. Scales on the size of the firm, just like your Spotify market data does. If you give it to a whole village, you got to pay a little bit more. It's incredibly competitive. So we've already demoed this to some of the most prominent organizations in the world, and the institutions are lining up to pay for the data. We're working with hundreds of firms here. But the really exciting part is that this revenue, when we sell market data, this flows back into the DAO. So revenue goes in sales in either dollars, stables, or Pyth tokens, and that's transferred over to the Pyth DAO. So Pyth Pro is going to change the way that everyone accesses market data. So what are you waiting for? Thanks so much. Okay. Yeah, thanks.
Mike, I told we're going to do a quick Q&A with you as well. So if you have questions for Mike Cahill, please, now it's time. I'll run over and give you the microphone.
I think we're entering now in the phase with most crypto projects where the purely narrative-driven ones are no longer surviving. We're like at that post-2000 moment of the internet where you can analyze something for like its potential value in the future, like your pets.com. But then like in 2001, it all burst. Like, it's never going to happen. Then 10 years later, it all happened, but just with Amazon. So I think that we're at this critical inflection point where people are now sussing out what are the main use cases for like most obvious use cases for blockchain applications, and are they getting traction? So we've been able to demonstrate for many years that we have traction with the supply side of the network, all these big name institutions, and then with the demand side now on 100 different blockchains and 600 different applications, 15 new applications every single month, almost $2 trillion of trading. Now we're going to start demonstrating this as people are starting to buy this data. And I think by being able to put real revenues back into the entire system, then it doesn't matter if we're cool, sexy, funny or not. Like people will just say, okay, this is one of those businesses that is really boring, is super critical, and maybe it makes a whole lot of money. So yeah, so revenues are basically sent over to the DAO. The DAO will decide what it wants to do, and obviously other DAOs have done this before with buybacks or distributions. But whenever the revenue is sold, there'll be a distribution partner who will collect a little bit of it, and then the bulk majority of it will go over to the DAO. So that goes into the network. Yeah, we did a mid-to-mid comparisons of the current setup that we have in test on Pyth Pro, on all the correlation of difference. So like the movement changes from the E-mini, and we calculated the 99th percentile to be 1 basis point. So the demand side, if I think about the business in two ways, right? There's one thing that we do is we supply data in cryptographically secured ways so people use it on blockchains, right? And that's where like all of our data will go through there, but we'll have different data sorts that go through there. Like if you have a highly specialized data, could be like an exchange who says, hey, I don't want to sell this anywhere else, but I want to have my branded data available on the blockchains. They're not going to do the work to have that integrated with 100 blockchains. They'll say, okay, we'll partner with Pyth. And that is what the government effectively has done, right? They're like, we're not going to go and write to 100 different blockchains. We're going to use Pyth to distribute that data. I think that will continue, and I think that is going to continue very quickly. Like I think that as we start to get more and more applications that do stuff with institutions, kind of what Rob was talking about, that'll accelerate. On the supply side, it's two things. So it's like, are people wanting to make more of their data sets available? Yes, for sure. We'll have a bunch of announcements on other like branded distribution partners to like publish data on the blockchain. But then it's like, do other publishers want to join our network? And that is a resounding yes. And so I would say that we'll have the majority of the tier one banks joining within the next 6 months as publishers into the network. We've been talking with all of them for a very long time. They love the model because it's not lost on them that they make no dollars from selling market data. And so, making some is better than that. So I think both of them are kind of up and to the right. Thanks. All right. Thanks, guys.
Thank you, Mike Cahill. That was the 15th.